In many of my videos, I've shared with you how it's possible to make money using different option trading strategies. For example, selling a cash secure put when I'm anticipating that the share price of a stock will rise. Now, folks that don't trade options think it sounds funny that I'm using a put option when I'm anticipating that the share price will rise in value. But that's part of the reason why I created my YouTube channel. I wanted to be able to share my knowledge of options trading so that viewers can get more information and understand more about what's possible and how to be profitable trading options. I've also talked about using a poor man's covered call to generate an income by taking ownership of a long-dated call option and using it as the underlying collateral to sell short-term covered calls. Plus, I've also shown myself trading both credit spreads and debit spreads as an effective method of capturing profits. But in this video, I specifically want to discuss selling covered calls for income. Let me take a quick detour before I start discussing how I use covered calls for income. I purchased this option trade for $4,000, and then 1 month later, I sold it for $5,900, giving me a total net profit of $1,900. That was a 30-day option trade, just one single month. I shared this trade in my Simple Trading Room community. And now you can get my stock picks and entry notifications by joining me today. See the link in the description below. Let me take 60 seconds to describe the basic components of a stock option. A stock option is a contractual agreement. So think of a contract or a document between two parties. In this case, there's going to be a seller of the stock option contract and a buyer of the stock option. Next, a stock option is bound to or refers to 100 shares of stock. The company stock that is associated with the stock option is known as the underlying stock. So for this example, the stock associated with the stock option is for company ABC Incorporated. The expiration date specifies when the option contract expires, and the specific time is at the market closing bell for that day. The strike price is the price that the seller and the buyer of the option agree to use for the execution of the option contract. Now that you've got a basic understanding of what a stock option is, right? It's an agreement between a buyer and a seller to trade an underlying stock at an agreed upon price, the strike price, on or before the expiration date. I'll describe how I sell the option contract to generate an income. Now let's say I own 100 shares of Coca-Cola, stock symbol KO, and I wanted to use those shares to sell a covered call. How would I do it? Well, first let's take a look at the stock, Coca-Cola, and then I would select Trade KO Options. And now I'm interested in selling a covered call, and now I'd pick the expiration date. Let's go 1 month out to April 14th. We could see that Coca-Cola is currently trading right around $61 per share. So for example, I could sell a covered call that's out of the money with a strike price of $62.50 per share, which is currently paying $1.15 per share in premium. But because this is an option contract, we need to multiply this by 100. So for selling this covered call option contract and having the contract get filled, I would receive $115. So in this scenario, if I had purchased the shares at $61 per share and my strike price was $62.50, if the option contract were to get exercised, I'd receive roughly $1.50 in price appreciation, or $150, plus the premium payment that I initially received from selling the option contract, which would be an additional $115. So my total profit from price appreciation and the premium I received would be $265. Now let's take a look at a real-world example where I sold a covered call, and we'll find out if I was able to make it profitable. Here's the actual transaction record from my account history, where you can see that I sold this covered call for symbol ENPH, Enphase Energy, with a strike price of $172.50 and an expiration date of March 4th, 2022. Now I sold this call option on February 28th, and it was filled later that morning at 6:55 a.m. Pacific time. Now at the time that I sold this call option, it was paying $3 per share. So when this option contract got filled, I received a total premium payment of $300, which showed up as a credit deposited immediately into my trading account. So if you're keeping track, you'll notice that this is a 1-week option trade. I sold the option on Monday, and it's going to expire that same week on Friday. Now let's forward to March 4th and take a look at a daily chart to find out what happened on the expiration date. Here's a daily chart, and so let's zoom in and focus on the expiration date of March 4th and find out what happened with the stock price in relation to my option contract. And just as a reminder, the strike price on my covered call option contract was $172.50. And as we can see from the chart, at the close of market on the expiration date, this stock closed at $158.15, which is well below my strike price. So as a result, this option contract expired worthless. Now, because I sold the option contract, having it expire worthless is okay with me. So remember that as the seller of a covered call option contract, when that option contract expires worthless, that means that the shares that were reserved as collateral, they're released back to me. So I get to use them for another trade, or I could sell them, or do whatever I want with them. Plus, I get to keep the entire premium that I received when I initially sold this covered call option contract. In this case, that's $300 in my pocket. I shared with you how it's possible to make money selling covered calls for income. And I've also gone one extra step and given you a real-life example where I did it myself. Now, let's take this one step further and think about what might happen if we expand this even more. Here's a simple worksheet that shows the 1-year profit potential if I were to sell a 1-week covered call every month, just like I showed in my real-life example. You can see in January that if I sold a covered call for one of the 4 weeks in January and earned $300 in profit, that income for the month would be $300. Now, if I repeated that for every single month, in 1 year, I'd have a total profit of $3,600. Well, now let's take the what if one step further. What if I were able to sell this covered call 2 weeks out of every month? So in the case of January, each week I'd get $300, and I would do it 2 weeks out of the 4, giving me a total income for January of $600. Now, repeating that process for every single month, at the end of 1 year, I'd have a total net profit of $7,200. Now, as long as we're in here and we're still playing the what if game, what if I had 5 different stocks in my portfolio that I could do this with? What would that look like? So the math is pretty simple at this point. If each stock that I used returned to me $7,200 per year, and I have 5 different stocks that I could utilize to sell the covered call option contracts, that would give me a total net profit of $36,000 per year. Now, I think we can all agree that real life never really works out this way, but, you can dream sometimes. And at least I can show you what the possible or the potential is. You can get immediate access to my trade alert notifications by joining my Simple Trading Room community. Be sure to use the special link that I've included in the description below so you can join in on the action. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.